Hey everybody, thanks for joining me. I just wanted to make sure my stream is working right, and I think it is. Today is a fantastic day in the crypto markets, so it should be a pretty good show right now because the market's done pretty well over the past couple days, up about 20%, so everybody should be in a good mood. On the show today, we're going to talk about a few things. First, just the markets as a whole, what we've seen over the past couple days, or the past couple weeks. Also, the potential of a huge volume spike that we just saw, the biggest ever in the history of the crypto markets. We saw it during the potential capitulation stage, and this recent recovery, the largest we've ever seen. So that could be a potential good sign that we got some of the weak hands officially out of the picture. We got some strong hands buying around 3,600, 3,700, 3,800, pushing it all the way back up to well over 4,000, about 4,150 right now. So that's certainly good news. Doesn't mean a bottom's in, but it is certainly a good sign that we've seen some major volume recently. But I'm also going to show you how to calculate the volume that I showed you guys today on Twitter. Basically, a lot of people look at value traded and not necessarily volume traded. Volume traded in this case is definitely superior. And lastly, we're going to go over a few major market developments that we've seen over the past couple of days. I think it's pretty important. It's also helped lead to some of the rally that we've seen over the past a day and a half, 2 days. So first and foremost, what about the crypto markets? Where do we stand? Here I have my handy dandy model that I post every single day for you guys, including performance, the model performance as well as market performance, so fully transparent. But here you can see in column D is the crypto universe return right here. And the crypto universe here, the way I define it, is all fairly liquid coins equally weighted. Right now it's about 210 or some odd coins that have enough volume to be included, and I simply equal weight the returns every single day. So what does that mean? Well, 2018 return for this crypto universe is 90% down. That's pretty freaking awful. The model that I run is down about 5%. And that's the top echelon of the model. Very hard to get, but you go down to like the 10th to 25th percentile, it's down 70%, so on and so forth. So the model is definitely down over 2018, but it's fully vested, long only, and the whole point of the model is to capture the crypto market return plus a handful of cherries on top, which you can see is exactly what it did in 2017. The market was up almost 13,000%, whereas the model was up over 800,000%. So tremendous returns. We kind of have to be in it to win it in a lot of ways, and that means you're going to get the major drawdowns as well as the big up markets. So what does that mean in terms of 2018, what we've seen recently? So we're down about 90%. What about recent? So I'll scroll over here. You can see the November return, negative 44%. That, again, is pretty darn awful. And actually, if you scroll up a little bit, you see March 2018 down 49%. So it's not even our worst month of the year right now, mainly because we had a great couple of days. But if you rewind a few days back, November was down well over 50%, 55%-ish, if I recall at one point. So that is really, really bad. That is capitulation in all shapes and sizes. And the reality is, we all try to put our finger on the pulse of just emotions and behaviors, but the price action at the end of the day is the final judge, the final barometer. And if you lose 55% in a span of a week and a half, that is clearly indiscriminate selling, capitulation, no doubt about it. Doesn't mean that's the bottom, doesn't mean we can't have another form of capitulation in the future, but it certainly means that was major indiscriminate selling going on right then. As well as high volume then too, which we'll get to in a few minutes. But what about recently? On November 28th, the markets was up about 16%, and on November 27th, it was up about 4%. Put it all together, it's about 20% move over the past couple of days. That's tremendous. We're about at 4,200, 4,150 right now in Bitcoin. That is a pretty big jump back. In terms of the model itself, we are down 34% in November, so it's actually outperforming the crypto universe by about 10%. That's pretty good, pretty excited about that. And I'll quickly maybe hit a few coins that the model likes right now, and then we'll actually jump into the volume analysis and probably why most of you are joining today. And we'll pull up the chat. Hey, got a few people here. Hey, thanks for joining. Feel free to ask questions, whatever. So again, this is the model that I post every single day. Just to reiterate for anyone that hasn't seen it before, what this is doing is it's merely trying to order the most attractive coins from best to worst on a daily basis. The signal is generally good for a day to about a week at a time. So this doesn't mean if something's in the dark green area, it doesn't actually mean it's going to go up. And it doesn't mean it's going to go down. It just means it's more likely to outperform the other coins. So it can actually go down less than other coins in a bad market, or it can go up more than other coins in a great market. What the BTC volume tab indicate to you, we'll actually jump into that in a few moments here. So I'll get to that in a second. But anyway, so the model is just trying to pick the coins that are most attractive on a relative basis. So right now, got various coins like the Binance coin that's actually hurting my Shrimpy portfolio right now because it hasn't been doing too well. It's actually a pretty defensive coin compared to a lot of altcoins. And you got things like IOTA, Lisk, Quark Chain, Digibyte, Dash, Tezos, etc. All very much set up to do well over the next day, the next week. Now, the model's actually done a little weaker over the past couple of days in the big up market because it's actually been a bit more defensive. And if you look at these names in the top 10th percentile, they're actually a bit more defensive than the general alt market, but that's okay. But anyways, so those are some names that the model likes, as well as you look at like CyberMiles, Nano, Nexo, Monero, etc. That's what you see here. Again, if you have any question, feel free to ask. Oh, yeah, Jeff just asked a question. What is the model based on? Generally, chart patterns. Actually, no. So it's a multi-factor quantitative model. It's actually how I manage my equity portfolios. That's actually what I do for a living. So what it's doing is it's picking up various factors, whether it's momentum, whether it's reversals, whether it's volatility, whether it's liquidity, market cap, so on and so forth, valuations. Another one I look at, there's a variety of factors, and I run analysis every single day, a basic multi-factor regression every single day, and I have been going back a few years at least, and I'm able to determine which of those factors leads to market outperformance for a particular coin, that is. So over time, I'm able to determine certain things like momentum of over the past couple of weeks generally leads to a coin outperforming in the future. Something like a coin getting crushed yesterday generally means it's going to bounce back. A coin that's lower volatility generally means it's going to outperform in the future. I know all that because I've run these regressions day in, day out, and I'm able to statistically determine what actually causes certain coins and certain factors to outperform. So it's actually done fantastic. Like I mentioned before, 2017 it was up 800,000%. And that's what I'm doing here. Is it's a long only portfolio. Generally, you can use it a multitude of ways, but it's a long only portfolio. So the goal is to beat the market when the market's way up and beat the market when the market's way down. But you're generally going to get the market exposure. However, there's some people that use the model in different ways. For example, I know one person that maybe has 10 favorite coins or something like that. And what he does is generally if there's a coin that falls in the bottom, call it 10% or 20%, he'll trim the weight of that coin and put it in other coins. So he's not using the model to buy new coins, but he's using the model to help him weight his existing favorite coins. There's a lot of different ways you can potentially use it. Hopefully that answered your question, but I'll jump into the volume analysis, and I think that's why many of you probably joined. So I added this to my Google spreadsheet. I'm actually not a Google spreadsheet fan, to be honest with you. I use Excel a lot more, and I actually use R quite a bit more, and that's how I did my initial analysis, to be honest with you. But anyways, I wanted to share the data with you guys. So what you see on your screen right here, I'll bring the chat back up. What you see on the screen right here is Bitcoin's daily data. And this is actually from CoinMarketCap. I got from a R package. So I'm able to download all this data. And you see the open, the close. You see the volume in column E, or this is really the value in US dollar terms. And then F, G, and H are things I've added myself. So what we're trying to do here is determine how many Bitcoins the true volume was actually traded in a given day. So just kind of give you an idea of volume versus value. Now, I mentioned before, I manage equities. So when we think of volume, generally, we think in terms of number of shares a company's actually traded. Value is how much dollars actually traded. So it's similar concept here. Volume is how many Bitcoins actually traded. Value is how many dollars actually traded. Now, what's reported pretty much everywhere is value. So, how many dollars actually traded in the marketplace. That's actually what CoinMarketCap has. I have right here in column E, but you can see that pretty much in any chart out there. But why is that important? The value versus volume here. Well, just think about it this way. If one of you guys kind of breaked out and FOMO'd and bought Bitcoin at $20,000 about 12 months ago, how many Bitcoins do you have? You just have one. Or at $20,000. So what's the value and what's the volume at that point in time, that transaction? The value, the traded value is 20,000 and the traded volume is just one Bitcoin. Now say you held it all the way down to 4,000 and you decide to capitulate and sell. What's the value and what's the volume? The value there, if you just sell your one Bitcoin, is 4,000. The volume, though, is one Bitcoin. It's the exact same whether you bought it at 20,000 versus selling it at 4,000, because you just only owned that one single Bitcoin. That's all you can actually contribute, is that one single Bitcoin. So how do you actually get the value, the traded value, to be equal in that case? Well, kind of do the math. 20 divided by 4 is 5. So you would actually need 5 people to sell a single Bitcoin at 4,000 to equal the same value that you put into the system when you bought at 20,000. Now, they both have their pros and cons. As an equity manager, if somebody gave me $50 million and I wanted to put to work in the markets, well, I want to look at the value because I want to know, does the market support this particular stock, support how much money I'm going to put in? But in terms of selling in this case, you want to know, if I have 2 Bitcoins or half Bitcoin or a third of a Bitcoin, how many Bitcoins are actually being traded and sold or moved around in the market every single day. So they both have their pros and cons. Am I getting to the market value to realized value? I'm not. That's something a bit different. You can feel free to explain it in the chat for everybody, including myself. I don't really know too much, about what that means. Sorry about that. But the key point here is the actual volume being traded. How many Bitcoins being traded on the marketplace? Now, when you talk about things like capitulation and you talk about things like breakouts, etc., well, capitulation, the way most people would define it, would be weak hand selling, a lot of people selling. Well, what matters there is actually how many Bitcoins, how many people are actually selling their coins, not how much value is out there. Because remember, in my example, you just bought your one Bitcoin at 20,000. You don't have more than one, you just have one. So the most you can contribute is just that single one. So therefore, the volume is much more important in that case. So how do you calculate this? It's pretty straightforward here. So the data A through E is straight out from CoinMarketCap. Got it through the R package, and I just downloaded it into a CSV file. F, what I did is the average price. So just took the open and the close and got the average price for the day. So Bitcoin traded. So what is Bitcoin traded? It is simply the value traded in dollars in a given day divided by the price. It's not exact because we don't have that data, but it'll be pretty darn close to how many Bitcoins were actually traded in that given day. So how many BTC swapped from my hands to yours or vice versa, irrespective of how much it actually cost, what the price was in Bitcoin, but simply how many coins changed hands. So kind of go down the line here, like you can see here, it starts at 2013, goes all the way to November 28. And then column H, I simply have the average of the 3 days previous, just to give an idea of where things are trending. I think I posted a 14-day moving average too, a bit more smoother of a line. So what you see over here in this chart is simply a column H charted out, where you see the number of Bitcoins traded every single day. Remember, this is the rolling 3-day average of the number of Bitcoins traded. You could see leading up to the end of 2017, or really the beginning of 2017, we had a very low and fairly steady amount of Bitcoins traded per day. And then 2017 began to see a trend up, and then finalizing with the end of 2017, which was an absolute explosion in the number of Bitcoins traded every single day, where it got up to about 1.5 million Bitcoins traded every single day on average. And that was basically the peak of the market and then the beginning of the decline of the market. Over the past few months, we've been trending down. You can see this right here. Really from the beginning of 2017 all the way through just recently, we've been trending down. Especially over the past 5-6 months, we've been in a pretty tight range right here, bouncing around, but fairly tight in terms of the number of Bitcoins traded per day, how many coins are traded between hands. But what happened in November? You kind of see the blue line at the very end. It just spiked up to the highest level we've ever seen. So what does that mean? That means more Bitcoins, number of coins have traded hands than ever before. Now I'll scroll down to the actual days at the end here. I'll pull up the chat again. Sorry about that. I actually only have one screen today. I'm traveling for work. I'm in very cold Milwaukee, Wisconsin. Not a lot of fun, but I'm here. Okay, I was just reading the chat. Thanks for that. But you can see here, this is November here. So remember, column F here is the price. Column E is the value traded. And column G is the number of Bitcoins actually traded. So you can see here, in terms of the value traded, there's really nothing going on up until about November 14th. This is the basic range we were at, which is $4 billion dollars traded per day, give or take 4 to 5 billion. So what happened on November 14th on? Well, that's where the market began to crash. You can see here, this is the open, this is the close. It went from 6,300 to 5,700, and the dollar value spiked. You can also see in terms of the number of Bitcoins traded also spiked. The day before, we had 700,000 Bitcoins traded. Well, the day we dropped from 6,300 to 5,700, we had 1.2 million Bitcoins traded. The next day was basically flat, but again, we had 1.2 million Bitcoins traded, so very elevated from what we've seen before. I can scroll up, but generally, column G is around the 500 to 600, 700,000 going back many months. So 1.2 million Bitcoins traded is quite a bit. And then on November 16th, 17th, and 18th, we were fairly flat. And you can see the number of Bitcoins traded actually declined a bit. Still slightly elevated, but it certainly declined a bit from when we crashed from 6,000 to 5,600. But then we've seen monster volume and monster value, for that matter, beginning on November 19th. That's where we crashed from 5,600 all the way through 5,000. We had $7 billion actual traded, but that, when you translate that to Bitcoins, that is about 1.3 million Bitcoins traded. Ever since then, we've been well over 1 million Bitcoins per day. Volatility's spiked up. Obviously, we fell through 4,000 on November 24th, and we spiked back up. But the value and the volume, both in dollars and Bitcoins, has been elevated ever since. And you can see over the past few days here, you can see the value on November 25th. That was a slight up day. We had 1.7 million Bitcoins traded. November 26th, from 4,000 to 3,800, we had 1.6 billion Bitcoins traded in the past couple of days. Excuse me. We've seen even more volume leading to today, where we bounced up 15 or so, 20% over the past day and a half. We've had 1.76 million Bitcoins traded. That's astronomical. That's some of the highest we've ever seen. I think we had 1 or 2 days in December 2017 that were kind of right up there. Another day in February 2018 when the market plunged, that was up there. But by and large, these are the days in November right here that's had by far the most Bitcoins traded. So what does that mean? That means a lot of people capitulated and sold their Bitcoins. All they could sell is what they own, so they sold them off. And a lot of people picked up brand new, shiny, cheap Bitcoins. Maybe they were whales, maybe they were people that were smart and sold at 20,000. Maybe they were new market participants, although I doubt it. But it doesn't really necessarily matter. It just means a ton of Bitcoins went from very weak hands to people that want to own Bitcoin and buy Bitcoin between $3,600 and $4,200. Do I know any wallet addresses of the big transactions? I don't off the top of my head. When you see a few, pop up on Twitter, people moving money around. But the reality is, to get numbers like this, it was not simply a bunch of big wallets dumping coins. It was a bunch of average Joes like you and I potentially selling and buying coins as well. And we're never going to know necessarily if it was big sellers or small sellers, down to a T. But the reality is, what we do know is the value and the volume, especially the volume traded, is the highest we've ever seen. So you can see the 3-day average here. On average, we've been basically at 1.7 million Bitcoins traded. That's just astronomical. So given the fact that we've seen a massive decline prior to the past couple of days with massive volume, that's a definition of capitulation. Then we've seen a nice recovery over the past few days. That's exactly what you generally see coming out of a capitulation event, where the market rallies a bit off of huge volume. So that's where we stand right now. Certainly doesn't mean the market's going to have a guaranteed bottom in. Anyone that talks in guarantees is kind of foolish. Bitcoin, the reality is, has a daily volatility of about 5%. So it can move quite a bit, and it should be expected to move quite a bit every single day. So there's certainly no guarantees which way it can go. But what we do know is there's a tremendous amount of buying pressure right now around 36, 35, 3,700. A lot of people are clamoring for Bitcoins there. And then there's a lot of people waiting to FOMO back in. You can see a little bit of market pressure push the markets up, and they jump right back in. So certainly no guarantee of a bottom, but pretty decent sign of that. Then also, I think it's very important to note that just because the market may have bottomed, it doesn't mean we're going to walk right into a bull market. That's just not how market cycles go. I don't know why, but a lot of people seem to think it's bull or bear all the time. That's not actually true. The good chunk of markets in real life are very flat, neutral, slightly trending markets, not roaring markets, roaring bull markets, or collapsing bear markets. A lot of them are just those trending, moderately or slightly trending markets, ranging, etc. So I wouldn't be shocked if that's what we kind of get into. We range around 4 to 6K for a little bit, and maybe break out in a few months, maybe. I think that would be a fairly decent base case scenario. So why is that a kind of base case scenario in a few months? Well, we actually have a lot of good market developments going on right now. You see Van Eck and NASDAQ actually came together and made an announcement that they're going to do a lot of collaboration, work together, and launch some futures next year. That's a great sign of a major exchange as well as a major asset manager coming together. Clearly, they wouldn't be doing that if they thought crypto or Bitcoin was dead. I mean, that is a solid 8-9 figure investment by both firms. So they truly believe crypto is here to stay, is going to grow. Backed, announced they have a lot of clients, customers in the pipeline. I'm in the camp of the delay was primarily to make sure everything was done correctly, that the T was crossed, all the I's were dotted. So that's exactly what they're doing when they launch in January. I have absolutely zero regulatory concerns with Backed. These are the type of people that go to lunch with the CFTC and have coffee with the CFTC and hang out with the SEC in the Hamptons type stuff. So they're very close-knit group. They wouldn't even get to this point if they weren't extremely confident in approval. So definitely no worries when it comes to that. So we just have to kind of hold our hands and just sit on our hands and just wait until January till they launch. But the fact that they've said they have quite a few clients in the pipeline is certainly good news. Another positive development, I'll bring up the chat again, is the collapse of the Tether discount. And so the way, I'll pull this up over here. So we're not going to get too fancy here with trading view charts. We don't necessarily need to. But here we just see a Bitcoin Tether pairing versus just a Bitcoin dollar pairing. So Tether over dollar, basically. And what we've seen is in October and November, it spiked. So the cost of buying a Bitcoin in Tether was substantially higher than the cost of buying a Bitcoin in dollars. This shouldn't be too foreign for most of you. It's been a pretty big market development, especially in November, where at some point it was 5% more costly to buy in Tethers than it was in dollars. It declined a little bit to 3-4% for a while. It's been hanging out around there for a few weeks, but very recently, over the past couple of days, it's collapsed, and you can see this fall in the chart right here. And then we're basically 0.5 to 1% greater at this point in time. So Tether has gotten much closer, much tighter to the US dollar recently. I mean, a few reasons why, but primarily saw Bitfinex announce US dollar pairs. So they're recognizing they need to kind of solidify their position as an exchange. But either way, it's fantastic news to see that Tether discount collapse closer to 1. And the reason is why is pretty simple. Markets hate risk and the markets hate uncertainty. Risk and uncertainty causes downward pressure on prices, always. Doesn't matter if you're talking crypto, doesn't matter if you're talking equities, doesn't matter if you're talking bonds, does not matter. Risk and uncertainty hurts prices. And when there is a big question mark on whether Bitfinex is solvent, whether Tether is a scam, etc., it's going to cause pressure on prices. So seeing Tether get closer to $1 kind of removes some of that worry from the marketplace and allows prices to increase a bit. Now, with any scenario, there's usually not, very, very rarely is there one single cause for a market to move up or down. A lot of times it's just straight up random, and a lot of times it's just a confluence of events. And here over the past couple of days, probably just a confluence of events here. You're massively oversold. You see the tether discount going away. You saw a lot of good announcements at the consensus conference. I mentioned before, NASDAQ Fan Act backed. All those things kind of led into a potential price increase. On the negative side, it looks like the ETF is probably not going to get approved this year. I would say we're well under, say, 5% for 2018, and probably well under 10-20% for February 2019. Still pretty confident in the long term, maybe by the end of 2019, mainly because once you get things like backed and the TD Eris platform and various other Wall Street type firms getting involved in crypto, it's going to give the SEC more confidence, but we probably need to see those guys go live first. All right, I got another question. If we assume this was capitulation, this massive volume, do you expect the volume to hold steady for accumulation or decline? Not to this level. It should be elevated for a while, especially if the market's trending. So if the market is trending up, you should see elevated volume, not to this level, but increased. And then frankly the same if the market tanks again, you're going to see elevated volume. Where volume begins to collapse is if volatility declines, you get into a much tighter range. That's where you're going to see the number of Bitcoins traded go down quite a bit. So anyways, guys, I really appreciate your time. Sorry about me, coughing a little bit. I think I got a little cold, probably because it's freezing cold here in Milwaukee, but I appreciate your time. Thrilled the markets recovered a bit. I think it should allow a lot of us to breathe a sigh of relief, especially when we see such volume pushing the price back up. When we hit 3,600, hopefully a lot of you guys got some fills around 36 or 3,700. We may or may not get that down there again, but regardless, you should be pretty happy with a fill at 3,600, especially if you plan on holding it for the long term. So guys, again, thanks for your time, and feel free to message me on Twitter or comment here on YouTube, whatever it is. Appreciate it, and we will talk soon.